Hi everybody, it's Active Rog here with a Forex tutorial video. In this video, I'll teach you how to analyze candlestick charts and understand candlestick patterns. Now before I get started, there are some important factors I'll need to point out before we begin. The first is to let you know there's a lot of disinformation and hype out there, and lots of bullshit. Trust me on this. I've lost a lot of money and suffered a lot of heartache in my years of trading because of the absolute rubbish and bullshit that's out there in books and online. Secondly, you should look at trading as a business and treat it as such. Put in real money, your hard-earned cash on the line. Up to about 90% of retail traders wipe out their entire account. Don't be one of the many people that end up feeding the market. Learn the fundamentals, trade responsibly, and most importantly, don't get greedy. Set yourself realistic profit targets. Thirdly, whatever you learn, do your own backtesting. This is key to success. Backtesting proves to you that something works. It also helps you whilst trading because you'll then know what you're doing works. If something doesn't work, disregard, discard, and forget it. 4. There are countless Forex trading systems and software being promoted on the internet promising riches beyond your wildest dreams. Unfortunately, it's all hype and bullshit, and I can tell you that none of these U-Boot Forex trading robot programs actually work. The only way you're going to make money trading Forex consistently is by learning the fundamentals, analyzing the markets and the charts, and learning and backtesting to see what works and what doesn't. Number 5, don't just follow what you've read in books or online, or you will lose money. Do your own backtesting to see if it works or not, and if it doesn't work, discard it and forget it. Educate yourself. Educate, and educate yourself some more. 6, the candlestick patterns I'm about to show you are proven. I've tried them and tested them myself. I use them and I have my trade results on eToro to back me up. One final point, this is very important. You must understand that you cannot simply trade off candlestick chart patterns alone. You must have a confluence of factors to consider, all aligning before you enter a trade. You must get familiar with the Forex calendar and the various events that affect global currency markets, such as interest rates, manufacturing output, employment figures, and so forth, and do your own research and analysis, including technical analysis. Okay, so let's get started on candlestick patterns. This is a bearish pin bar. Pin bars are perhaps the most famous candlestick. This is because, quite simply, they are very consistent. We can see the real body and the wick. For a bearish pin bar, the wick should be at least 2/3 the length of the candle. You'll find a bearish pin bar after a bullish move in the markets. The reason this pattern works is because the large wick shows a strong surge of sellers coming into the market. This suggests the bears may be gaining control and we should be looking at a downwards trend. This is a bullish pin bar. A bullish pin bar is exactly the opposite and will be found after a bearish move. If it has a nose, it should be very small. It should also be noted that pin bars are not doji candles. Even with a small nose, if any at all, the bottom wick should be at least 2 times the length of the body. You'll find a bearish pin bar after a bearish move. A pin bar will appear, suggesting that the bulls may be taking control of the markets with a strong possibility of an uptrend. This is a type of bearish morning star setup, and this is a type of bullish morning star setup. A bullish morning star setup has a strong bearish candle. This is followed by a doji candle that's about the same length as the previous bullish bearish candle. It should be contained within the real body of the previous candle. This is followed by a strong bullish candle. Why does this pattern work? The doji candle shows that the bulls have stepped in and tried to push the market higher. Although they failed on the first attempt, the bears also failed to push the market down. This is shown because the doji is contained within the real body of the previous candle. This seems to suggest that they may be running out of momentum. The strong bullish candle forming after the doji candle completes, showing that the bulls have taken control. The bearish setup is the same thing but reversed. Note that the doji is now upside down. The strong bearish candle forming after the doji candle completes shows that the bears may have taken control. The next candlestick pattern is called a bullish piercing pattern. This pattern begins with a strong bearish candle. The next candle caps down at the open rather than opening at the close of the previous candle. The bullish candle or piercing candle should then close at least 50% into the real body of the previous candle. Why does this pattern work? The gap down suggests strong selling pressure, however the candle then closed bullish, which shows that even though prices gapped down, the bears couldn't maintain control of the market direction. A bearish piercing pattern is simply reversed, with the pattern beginning with a strong bullish candle. The next candle gaps up, and the bearish candle closed at least 50% into the real body of the previous candle. Why does this pattern work? The gap up suggests strong buying pressure, however the candle then closed bearish, which shows that even though prices gapped up, the bulls couldn't maintain control of the market direction. This is a bullish engulfing pattern. The bullish candle is larger than at least the previous 5 candles. It can then be said to engulf the previous candles. Why does this pattern work? Quite simply. The bullish engulfing candle shows a strong surge of bulls coming into the market, showing a change in market sentiment. The bearish engulfing pattern is exactly the same as the bullish engulfing pattern but reversed. The gap up suggests strong buying pressure. However, the candle then closed bearish, which shows that even though prices gapped up, the bulls couldn't maintain control of the market direction. Why does this pattern work? The bearish engulfing candle shows a strong surge of bears coming into the market, showing a change in market sentiment. This is a bearish free method candlestick formation. The first candle is a strong bearish candle, and then there are 3 bullish candles, all of which are contained within the real body of the first strong bearish candle. Then there'll be another bearish candle. This candle should be equal to the length of the first candle or be very close to it. Why does this pattern work? The 3 bullish candles show the attempt by the bulls to take control of the market. However, there's no real strength here. This is known because they are contained within the real body of the previous candle. The next bearish candle confirms the signal. Since price is contained within the first bearish candle, you can see there is little bullish sentiment. The next bearish candle confirms where the strength is held and confirms the signal. The bullish free method candlestick formation is the same as the bearish free method candlestick formation but reversed. The first candle is a strong bullish candle, all of which are contained within the real body of the first strong bullish candle. Then there'll be another bullish candle. This candle should be equal to the length of the first candle or be very close to it. Why does this pattern work? The 3 bearish candles show the attempt by the bears to take control of the market. However, there's no real strength here. This is known because they are contained within the real body of the previous candle. The next bullish candle confirms the signal. Since price is contained within the first bullish candle, you can see there is little bearish sentiment. The next bullish candle confirms where the strength is held and confirms the signal. That's it. Thanks for watching. I hope this has helped you improve your trading knowledge. If you've got any questions, flick me a message. Don't forget to like my Facebook page, subscribe to my YouTube channel Active Rog, and follow me and copy my trades on eToro. Trade well, don't get greedy, set yourself realistic profit targets, and until next time, Cheerios and see you at the top.